In this video, we will use another valuation technique known as company comparables. This technique uses a company against its peer group to determine its value. To access this, we will select the research menu from the dashboard, valuation menu, comparable submenu. We'll free up space by clicking on the triple and double arrows. We're going to test Royal Bank on the Toronto Stock Exchange and compare it to the large chartered banks on the Toronto Stock Exchange. You can see the sector that it's in, commercial banking. And we will add another criteria. In this case, we'll select close price plus or minus 50%. Broad criteria, just to show, for example. So we're selecting companies in the commercial banking sector with this close price range of $40 to $120. We will narrow the dates over the last 12 months and run this comparison. At times this can take a few seconds to load the data due to the volume that's involved. So if I look at the exchange column, for example, I can quickly slide down to the companies on the Toronto Stock Exchange and start to select comparables such as Bank of Montreal, Bank of Nova Scotia, Canadian Imperial Bank of Commerce, and Toronto Dominion. If we look at the values, we see the most recent values for Royal Bank on an earnings per share, book value per share, sales, cash flow, and EBITDA per share basis. We also see the ratios and valuations for the comparative companies, Bank of Montreal, Nova Scotia, CIBC, and Toronto Dominion. And we see the average values for PE, price to book, price to sales, price to cash flow, and EBITDA based on the numbers from these companies. So if we look at a price to book ratio, for example, we see the average is 1.88 for these four companies with a range of 1.6 up to 2.2. On a price to book basis, we would value the company at $66.76 per share. On a price to earnings ratio basis, we would show a valuation of $76.79 on a comparative basis. So this is how the comparative companies valuation tool is used.